exactly 10 years ago called Predicting the Fall of Bear Stearns, Lehman Brothers, Commercial Real Estate, European Sovereign Debt Crisis, etc. I took my analytical team, about 5 strong, and we do solely digital assets now. I guess I'm old school in this realm, starting in 2013, to show how new the industry is. And we have, the company is very tasty. We have a slew of products. We have a smart contract-driven application that basically replicates a venture capital private equity fund, solely peer-to-peer on the blockchain. We do fundamental forensic and global macro analysis on digital assets, not only ICOs and platforms, but real-world assets that have been tokenized, such as a cash-flowing building on GW campus, etc. And we also do investment. I take my own capital and I put it at risk. Again, solely from fundamental analysis, forensic analysis, and global macro perspective. And I'm willing to fund anything that I feel has the requisite risk-adjusted reward.
Excellent. Okay, let's start down with you, Reggie. So what drew you into the blockchain space, and what's the opportunity that you see? Because it seems that when people get into this blockchain thing, they kind of go full hog, right? So it seems like, tell me about your experience getting into the space and why.
Okay, well, I had, initially I was right before the market corrected in 2007, 6. I was a real estate investor. So I was always from the outside looking in. It was quite obvious in 40-foot red letters, this is going to blow up momentarily. And I was going to start a hedge fund, and the hedge fund didn't take off because hedge funds weren't doing well. So I just sold my analysis, and I basically speculated on collapsing fire companies, finance, real estate, etc. In 2010, one of my customers asked me analysis because I was looking at Bitcoin. I ignored him. He did the same thing in 2011. I ignored him. Now remember, Bitcoin was about cost basis of 30, 40 cents at the time, if that much. In 2012, that's again, I finally got it on in 2013. But being in the media a lot, I ignored primary media and I went straight to the white paper in the Bitcoin wiki. I read about smart contracts and how the blockchain worked when jaw hit the ground. I did due diligence for about 2 or 3 months because it seemed like it was too good to be true. It wasn't, and I jumped full in. I quit the blog, I quit the advisory business, I quit my proprietary investments, and built up an engineering staff and started creating applications that allow the use of smart contracts. That was 2013, and here I am today doing the same. Everybody always thought I was crazy, which is interesting because I started doing smart contracts and peer-to-peer transactions 2013, 2014. Nobody really got it. Now, Bitcoin is in the mainstream, okay, but it's in the mainstream. Most of it is either speculation, right, or big entities such as financial companies attempting to streamline their back end. Our perspective, I'm both an investor and an entrepreneur. Our perspective, our business model is to totally disintermediate the large banks, right? Literally take them out of the equation and using public networks, never private networks. We've seen this story before. Those of you who are close to my age when the internet came out, the big product initially was the intranet, where you built your mini intranet behind a firewall, and they charged a lot of money for that, the vendors and consultants. Fast forward a few years, it was a waste because everybody, after building an $800,000 intranet, had to go to the internet. So I told the story, which I see clearly and plainly, but everybody thinks I'm out of my mind, from the big bankers to the consultants to almost everybody else. So give it a year and a half, and they're like, oh, I get it.
So let's talk about ICO, starting with Reggie. How has this changed your business? Is this an opportunity or a threat to what you're doing? So you're saying you're coming from a conventional, kind of more conventional VC background. You know, what does that look like in your world? Are you doing equity investments? Are you doing token investments? Are you just no longer relevant? I mean, where do you stand here?
Actually, I come from a conventional global macro background. So global macro is not really conventional. Global macro is effectively macroeconomic bets. Anything, any asset, any place in the world, at any time, I will go long or short on. So basically, my mandate is to make money. Outside of that, legally. Okay, outside of that, it doesn't really matter how. I've been doing that for a while, my own capital mostly. I am a perfect example of how the ICO, I think, should work. I cannot get a venture capitalist to fund my ideas for 4 years straight, 3 years straight. So I did an ICO, but I did it as a global macro and a fundamental investor would want to do, where I took the tokens, and I made a strong accounting argument for what the tokens are. Has nothing to do with investments, okay? And I consider the tokens to be more valuable than any currency like instrument that we use to pay for them. So I only sold a small amount that were prepaid fees for our products and services. I think it was one of the most successful IPOs in the industry, and it enabled me to accelerate the product development. Now, I've created smart contracts that replicate venture capital fund performance, but it's still just software and contracts. They perform better than the market by far, and they've outperformed many venture capital groups, and we're just getting started. What funds this software is old school manpower. I have 5 analysts, and all they do day in and day out is analyze digital assets, IPOs, platforms, how it's linked together. We have a valuation framework that counts profits, revenues, margins, prospective markets, etc. These are metrics that you almost never see in the industry. And the reason is because the industry is immature. It's lacking diversity. Most ICOs are a bunch of software programmers and engineers who get access to capital and start building software. That's not a business. A business is diverse. You have finance guys, you have management guys, marketing guys, and usually the minority happens to be the tech part, even in the tech business. If you look at Microsoft or Intel, most of it is management, marketing, etc. The minority, not a vast minority, it happens to be the tech guys. So coming from an entrepreneurial background, that's how I built the business. And I think we're off to a strong start. You know, we have patent applications in multiple jurisdictions. The earliest priority date I feel in the industry. Not my fault though. It's working with smart people. That's how I can't take credit for it. We have traction. We have several products ready to go. And our ICO was 1 year, 2 months ago. We have 3 products mature, ready to go out the window, and the 4th that we're launching next week. And the reason why we're able to do this is diversity, okay, never just all one thing, and hunger, okay. We are now looking for other ICOs who do the same. Now, many ICOs are considered scams, and I agree with it, but in my opinion, many IPOs are considered scams as well, so.
We'll come back to that, the scam part, but I think the discipline of building a business still exists regardless of how much money you can freely raise now. So Reggie, you had a comment that I want to make sure we give Marshall some time to counter argument.
Yeah, I was actually going to build on that. So there are 3 issues. There's one question that I've asked every single token startup. Nobody has answered the question, and it's basic, and it's a question that everybody should answer. When they come to me, and they come to me as an investor, and they want money, I say, how much money I'm going to make? When? What's the risk? Huh? Out of, I'd say, about 50 companies over the last month and a half, not a single person or group asking for investment capital has been able to answer that question, which is ridiculous. You can't go and ask somebody for money and not tell them how much you're going to give them. The second question for investors, no investors ever ask, well, how much money I'm going to make, over what period, and how much risk? In every investment ICO group, I've never heard the investors ask that. And the third, which when I was in Silicon Valley, which was a bastion of technology, intellectual capital, there are quite a few startups that created smart contracts that parceled out capital over time. The problem is you cannot create a technological solution to a human problem. You need to invest in a strong team. So if you don't trust that team with the capital, first of all, you shouldn't be given the capital. It's just that simple.
I think the fundamentals still exist, right? Team, product market fit. I think a lot of that just kind of went out the door last year. Hopefully it seems like it's going full circle. Complicated subjects here. Okay, we've eaten through our time pretty well here, but I want to ask one last question, and then I want to make sure we give a little bit of time for questions from the audience. So Reggie, you kind of already given, like, what's the advice you give to entrepreneurs? I think we've kind of, I mean, in addition to what you just said, as far as being able to answer those questions, is there any other advice you'd give entrepreneurs that are thinking about entering let's say the blockchain space, or doing an ICO, or even approaching you? Like, what is the advice that you would give them?
So for entrepreneurs, you have to have a value proposition, okay? Without a value proposition, that's why you can't answer the question of how much money you're going to make. The reason you can't answer is you don't know. A value proposition is based in a business model, okay? You need to know how you're going to bring money in, how much money that you're going to keep, and when and how will competitors come and eat your margins, because they always will try. The only reason they won't try is because you weren't making money in the first place. Because we're using these fancy terms of blockchain, DLT, tokens, etc., people think that we're operating a new game. It's the same game that's been going on for the last 10,000 years when the first caveman sold a rock. Okay? Fundamental analysis, money. I buy something.
I think that's a great point, right? I think that's what we kind of got lost in,
yeah,
right?
And everybody, yeah, they think, you know, the math doesn't apply. Once you have a business model, you create a value proposition, then you create an investment thesis, and you sell somebody on it. If you have a good business, you shouldn't have to worry about liquidity for the tokens. The token price goes down, people learn how to value it, and then they will buy it, that token price goes up. Right now, you have volatility in tokens because A, very few real investors in the market, so they don't know how to value tokens, and B, the tokens were structured improperly. And that's the second biggest advice tip I could give you. Structure the tokens with the value proposition. So economic value flows from the company into whoever owns the token. Whether you have a security token or even a utility token. A utility token is very valuable if you need it, and it's not an investment at all. But you have to outline and create a value proposition. So anybody wants to know how to do it, contact me afterwards.
If you were to go to Reggie, what would you say to Reggie? And Reggie, what would you say to him? So in other words, I got this product, here's my great product. Reggie, you're interested in it, then what happens?
That's easy. First 3 sentences to me would be what?
CratePay's building the first cryptocurrency that can be used at 50,000 plus retailer locations.
Okay, so from my perspective as an investor, if I'm a pure investor, and I'm being honest, I don't really care what CratePay is, what they do. I'm a financial investor. I'm looking for a risk-adjusted return on my investment. That's how you catch my attention. You give me a strong, real number and a reason to justify that number. Now you have my attention for the next minute and a half. After that, then you can tell me what CratePay is, what they do, whatever product they have, etc. A financial investor wants to make money. A strategic investor wants something else. So you identify your investor, find out what type he is, tell him what he wants to know, as long as it's honest. I think that's simple, and that's how you get the attention of 2 major types of investors, financial and strategic.
So I tell you 125x your money and then put a whole bunch of disclaimers after that.
Okay, so 125x knocks him out the park, unless his second statement can justify that.
I'm sorry, I missed that. You'd say what?
I was kind of playing with him, but I said I'd tell him 125x his money and then I'd put a whole bunch of disclaimers after it.
Okay, but that's fair, but how would you do that? You got tokens, right? So would you give him tokens as an investor? He would give you money, you would give him tokens, and that would be your kind of incentive to hold that token and potentially sell it later down the road to get your return?
I think the answer is really what he said. It's really consultative, right? So every individual investor has different thesis, different risk tolerance, different outcome. Many of the investors we've talked to are going to look for equity and tokens. Some are just equity and some are just tokens. So you're going to have to figure out what offerings you have as a company and what they're interested in and how you can make that match between the two. Not every investor is a fit for every company.
Let me try and squeeze a quick answer in, but I think this is important. Okay, token and equity are not necessarily mutually exclusive.
Right.
A token is just a piece of software. Okay, if I were to design a token for a perspective, I'd say to entice an investor like me, I'd say, you know, we have the first patents with the earliest priority dates in this business. We have 400 clients growing at a certain rate, and I'm going to give you a token with a 10% revenue share, no voting rights, and the ability to capture capital appreciation for the next 5 years. You've gotten my attention now. Why? Number one, you just don't have an ERC20 token. You have a clear path of economic value transfer from the company's success into my pocket. Okay, in 2 different ways, income and capital appreciation. You've done your homework, you've created a real investment token, and it appears you have a real company behind it. Now, you have my attention for the next 2 or 3 minutes. Now you've backfilled what you said in with how you're going to accomplish that. Okay, and now you have a conversation.